Good evening and welcome to Bull Markets Talk Show. This is your host Rian Hobson, and tonight we have Swing Trader, the people's favorite trader. We will discuss the US dollar, gold, the Nasdaq, the rand, and also the South African economy. And believe me, we did some testing, we did everything well, and everything is working perfectly. Tonight, finally, we're having Swing Trader with us after the break.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good evening and welcome back to Bull Markets Talk Show. This is your host Rian Hobson, and please don't forget to subscribe to my YouTube page. Drop your comments. Please drop your comments for Swing Trader and also your questions. Like, and please don't forget to subscribe or click on the link below and raise the free account and just deposit $250 and get the free class. We are with Swing Trader, and I will definitely not leave you guys for long with Swing Trader. Swing Trader, how are you?
Good evening, Ryan. I'm well, thanks, and yourself?
I'm good, man. No complaints. Look, this is a long-awaited story for the people. I'm sure a lot of the people are actually excited about it. But let's kick on with it. What the main story was last Friday with the U.S. job number. Do you think the Federal Reserve is going to dial back on the whole tapering story?
Sure. The US story. I think it's the number one hot topic on everyone's mouth and probably every town. Well, I think with the US, I think the picture is fairly simple, although there's a lot of confusion going around at this point with regards to tapering. I think it's, like I said, it's the number one hottest topic. Everyone just wants to talk about tapering. But obviously, looking at the jobs numbers of last week, I think also it would be important to give a bit of context as far as the central bank, which is the Fed in this case, is concerned. Mm-hmm. Obviously, we know every central bank has goals, right? Obviously, which is price level stability, full employment, and the likes. And correct. With regards to inflation, the inflation numbers of July were unchanged versus those of June. Right. I think also that's mainly brought on by the recession in the commodity prices. And then secondly, the jobs numbers, they weren't really nothing to write home about also, which means that the Fed are still trying to deal with the spare labor capacity that we're seeing in the US. And obviously until they meet their employment goal, I don't think they will taper. And obviously now, I actually see, when I look at the US economy, I see how it fits into the federal projection model, whereby they said they will start tapering in 2023. I think earliest would be next year in the fourth quarter. And obviously, when I look at the entire economic picture, I see how it fits and ties with that model. And obviously now, on my end as well, I don't expect them to taper anytime soon. I think the earliest would be next year, Q4. That's the earliest. Obviously, I'm looking at the employment numbers. I'm looking at the inflation. I'm looking at the commodity prices in this instance. Yeah. Maybe it would be helpful to pull up some chart.
Okay. But just to as you pull up the chart, do you, while we are with the tapering story, do you think actually the whole tapering situation of the US, or basically of all central banks, especially let's stay with the US actually, for example.
Okay.
Do you think actually the tapering actually works? Does it actually create jobs?
Look, it does work. Obviously, with every economy, there's a turnaround time. Obviously, with I think the obvious would be 6 to 18 months, right? So obviously now they're still printing and interest rates are still low. So with tapering as well, I think there's something a lot of people are not aware of is that with tapering, the results of tapering are not immediate. So if should the central bank start tapering now, it doesn't mean that the market will tank now or things will just go upside down in this moment. There's a turnaround time, like I said, it's about 6 to 18 months.
Yeah.
And then sometimes it's even longer than that. So even if the Fed were to taper next month, we wouldn't see the market
Yeah.
tank right away. It would take time. Perhaps it may even start tanking in 2023 because the effects of the tapering would have to trickle into the economy until
Yeah.
they get to a market level whereby I would start seeing the market react to that. So even if they were to taper this year, I still think the market will go on for an extended period of time until it starts turning around.
Okay. All right. No, I get you there. And also with the other question, what do you think is the outlook actually for the US dollar this week?
Whew, I think everyone knows that I'm not a short term. I'm not a short term. I don't do short term analysis, and I don't have a short term outlook. However,
Uh-huh.
I think the dollar is still very much bearish, considering
Uh-huh.
what the US is doing. Obviously, interest rates are still low. They're still printing a lot of money, right? So with that,
Uh-huh.
I think those are the obvious those are the headwinds that are the dollar is
Yeah.
faced with at this moment. So with that, I see the dollar going down probably till next year, maybe fourth quarter or third quarter. Like I said,
Ooh.
for now, yeah. And also on the screen, it's a dollar index
Okay, I'll just bring
focused
actually the
model.
screen up.
Yeah, it's a
Uh-huh.
dollar focused model I ran, I think, earlier this year. And then also it
Uh-huh.
suggests that the dollar is still going down, perhaps till the 80 handle, or maybe just
Ooh.
around that handle,
Okay.
right? Obviously, this model ties in with the Fed looking to taper in 2023. So obviously, it means
Yeah.
until then, the dollar can just keep going down. It will just keep going.
In this instance, do you
Mhm.
actually take in consideration even with the tapering?
Yeah, I think obviously the main catalyst here is the current QE that's going on and the low
Right.
interest rates. That's the main catalyst behind the dollar bearish move. And then should
Right.
obviously they start tapering, I don't think the dollar would turn around right there and then. It might take some time to start turning around, even with the tapering. So, but the trend for now, it's just gonna keep going. Obviously, there will be pullbacks along the way and the likes, but it's just gonna keep going. So maybe
Ooh,
let's pull a real dollar index chart. This is a dollar
that
index
is.
chart,
Uh-huh.
right? So we still now the price is currently at the 92 handle, and like I said, the
Correct.
model I ran um, forecast that the dollar will reach the 80, about the 80, 85 handle. So there's still a lot
Yeah.
of room for the dollar to go down. So with that, I'm not looking to be picking up dollars anytime soon. Obviously, I think also with currencies, we have to be very careful because it's two assets against each other. So to say
Right.
as well, the dollar will keep tanking, it's fine, but
Uh-huh.
we need to be specific as to the dollar against what. You know what I mean? Because some
Correct.
currencies
Correct.
are very much weaker than the dollar. So in that case, even though the dollar is facing headwinds, the dollar will have
Uh-huh.
to gain strength against such currencies. But dollar in general should be going down and probably till next year or even 2023.
That is now interesting. Now, okay, there is someone live, Chart Whisperer. How is it, people? Okay, he's just greeting us there.
Oh, okay.
Um, just for interest sake, let's say the dollar goes to about 80. Now we need look, because also I do understand of what you're saying. This is including now the QE that comes in. They obviously they push back interest rate decision that they're gonna hike interest rates. So we will definitely get a lower dollar. That is what you're saying. So basically, the US economy will be washed with money. So where will we see gold in?
Okay, gold, I'm looking at a breach above the 2000 handle, which we reached last year. So I'm looking at a breach above that level. Obviously, we know dollar and gold, they inversely correlated. When one goes up, the other goes down, right? And obviously, the gold as an asset, it's a risk hedging asset, right? Obviously, it hedges against inflation, against flooding of money in the economy, and all these other economic situations we may be faced with. So with that said, I see gold breaching 2000. Obviously, by saying I see it breaching 2000, it does not mean that it's just going to jump from the current price to breach 2000. It's just going to grind slowly over time, but over the long term, I see it breaching 2000. Perhaps maybe even this year, I'm not sure, but my target is above 2000 on gold, probably into next year or whenever, but I definitely see it breaching the 2000 handle.
Oh, that is interesting. Just for interesting sake, I know someone is actually putting a question here, Chart Whisperer. He's actually asking, he said, hold on, so the US dollar doesn't weaken against all its other peers? He's just asking the question there.
No. No, obviously, like I said, currencies are quoted against other currencies. Obviously, that's mainly reliant on how powerful the economy is or what catalysts are currently at play. So, for instance, if you take the dollar against the commodity currencies, it stands no chance against such currencies because those guys, the commodities are in high demand at this moment. There's a lot of demand for commodities. So the dollar, in this case, it has no competitive advantage over those currencies. So in such a case, you wouldn't expect the dollar to gain strength against, say, the Australian dollar or the Canadian dollar or even the New Zealand dollar, because those are commodity currencies. They're backed by commodities. And it means those countries are seeing a lot of money through commodity exports at this moment, while the US is flooding the economy with money and devaluing the dollar. But now, if you take the dollar again against a country like Turkey, Turkey is facing high levels of inflation. The economy is just going nowhere. So in such a case, you would obviously expect the dollar to gain strength against Turkey because it clearly has a competitive advantage over Turkey, while Turkey has nothing to back its currency up. So
besides tourism.
And obviously at this moment, tourism, the tourism sector is down due to COVID and lockdowns and all those things.
Oh, you actually put down something very, very good there. There's just another question that flies in again. Do you see Bitcoin as a hedge against inflation?
Bitcoin. Bitcoin. I don't want to go all in on Bitcoin. I'm just going to keep it short. Obviously, I don't want to face a backlash because we know the stigma around Bitcoin. But obviously, Bitcoin, I wouldn't say Bitcoin is a hedge against inflation, right? Because obviously, I think firstly, we need to understand what drives Bitcoin. So if we look at the situation of 2017 where Bitcoin jumped up, and then also the most recent one from 2020 to this year, there was a lot of money that was pumped into the economy using different measures or different instruments, right? Obviously, in 2017, when Trump came in, the first thing he did was he cut taxes. And I think everyone who understands economics knows what tax cuts do in the economy. They release a lot of money. They allow consumers to have a lot of disposable income, which they can use for whatever reason or whatever need or whatever want. So in such a case, what happened was a lot of consumers took that disposable income which Trump had released through tax cuts, and then they pumped it into Bitcoin. And then last year to this year, the same situation happened, but obviously now the Fed were issuing out stimulus checks, right? So most of that money, or the stimulus check money, went into Bitcoin again. It's because obviously I ran like a detailed analysis between Bitcoin and the US economy, and the significance was extremely high, and it made sense because now, obviously, looking at the stimulus checks or the tax cuts, all the money that most of the people used it to speculate into Bitcoin, and then it pushed all the crypto prices higher. So I wouldn't say Bitcoin is a hedge against inflation. I wouldn't really say that, because obviously it based on the analysis I read, it appears to be a cyclical asset, so to speak. So it moves together with equities and everything that follows the money or stimulus money. It just moves in that direction. So I wouldn't say it's a hedge against inflation. So gold is the most known inflation hedge, and I wouldn't want to say Bitcoin and gold serve the same purpose, or I think it would be incorrect, and it would be very misleading to say
you will
gold
get
and
in
Bitcoin
trouble
as a hedge or whatever. So I wouldn't really say Bitcoin is a hedge.
Yeah, you will definitely get in trouble with the Bitcoin miners. But but on the other side, when you talk, so like as you said, you made your analysis on.
So I'm not sure
actually,
if that answers the question.
Yeah, like, because what I actually see, what you're saying is, when money comes into the economy, like whether it was now through taxes or whether it was now through the stimulus checks. So when money comes in, people goes to Bitcoin. The same approach it goes to basically to stocks or to Tesla, where people can buy it left, right, and center when there's money available. Swing Trader, you there? I will just take a short break, guys, and then I'll be back with you.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good evening and welcome back to Bull Market Stock Show. This is your host, Rian Hobson. The questions are flying in for Swing Trader, and we are definitely back with Swing Trader with some more news regarding Swing Trader's prediction when it gets to the US dollar or where it gets to Bitcoin and gold. Swing Trader, you're with us?
Yes, I'm with you.
Yeah. Look, I know we're supposed to go on to other questions. I'm actually was very interested when you were talking about the dollar goes to 80. And there's just one question I was thinking of. Where do you see then inflation? If the dollar index is moving towards 80, I mean, the euro would be extremely high, British pound. Where would you see the inflation of the US dollar, just for interest sake?
With inflation, I think inflation is actually transitory. The Fed were actually right in saying the inflation is transitory. And obviously this is, I'm saying this now based on the commodity prices. So on the screen here is a chart of I think these are some commodities in the US, right? And majority of the commodity prices have receded in the past month. So which means now they retraced a bit. And obviously with the retracement of the commodities, it means now producers are going to pay slightly lesser in terms of purchasing commodities than they did, say, 2 months ago. So that
Right.
provides a bit of relief, whereby now they also likely to reduce their selling price to customers or whoever buys their products. So with that said, now it means inflation as well will slightly pull back. I'm not sure for how long the trend will continue, but I see inflation pulling back a bit, maybe toward maybe until the end of the year into the beginning of next year. I'm not sure on the time frame as yet, but I definitely see inflation pulling back. And then I think it may only pick up next year with the infrastructure stimulus Biden has lined up. I think it might only tick up after that stimulus goes through. But for now, I see inflation pulling back. Also, with July, we saw inflation remain the same. It was
Okay.
it came. I can't remember the number, but it remained the same. So I think in the coming months we might see it pull back a bit. Also with the oil market as well, we know that the OPEC Plus now, they're increasing production. Well, they started increasing production in July by
Right.
400,000 barrels per month, per day rather. Sorry, 400,000 barrels per day, and then the target is 5.8 million barrels. So which means ongoingly every month they will be increasing supply by 400,000 barrels until next year September. So obviously now by perhaps say next year January or February, I think oil
Right.
prices will start pulling back, and when that happens, obviously they will take inflation down with.
All
So
right.
I don't see inflation spiking high or anything like that.
Okay. This is actually interesting now that you actually pointed out with the commodities. So obviously we're driving back to South Africa. South Africa's GDP will get released this week, and there's a forecast of about 2% quarter-over-quarter increase for GDP numbers. What is your expectation for this number to come out? I think it's on Wednesday when the GDP figures of South Africa will come out. What is your forecast regarding that number, since commodities are flying up high?
I think with the number, it's I think it's a bit realistic. We could obviously come short of the number, or we could exceed it, but I don't see us exceeding the number. Obviously, this is now we're reporting for Q2, which was before the riots of July. And I think from April to June, there was a lot of demand in terms of commodities. So I think we may meet the number, or we may slightly come short of hitting the number. But I see the Q2 GDP actually expanding, maybe at a slower pace, but I still see it expanding. And then perhaps after that, we may start to see GDP decline. But for Q2, I'm not fearful at all, because there was a lot of demand in terms of commodities, and we exported a lot of commodities at the time. So I see the number being met, or maybe coming slightly short of it, but I see GDP growing for Q2.
Okay, so the 2% forecast looks very realistic for you.
Yeah, it looks very realistic. I think also with this, it also ties in with a model I ran earlier, on a forecast model of GDP I ran earlier, and it gave around the same number for Q2. Maybe let me see if I can't find the chart here quickly. Okay, yeah, this is it. So it looks a bit realistic. Obviously, this is a forecast model. It won't give you the exact number, but it gives you like a band to say you can expect GDP to be within this range based on whatever factors you used at the time. So that 2% is a bit realistic to me. I don't see anything off with that. It's only Q3 GDP that I'm a bit worried about.
Okay, because that is where the strikes come in, and the harbor that
and the
closed
lockdown as well. Yes.
Okay, no, I'm with you. I'm fully with you. With the forecasts that you have with the commodity prices, and also with the weaker rand that you pointed out, where do you see actually the rand then?
Ooh, the rand. Look, obviously, I think the South African economy, as much as GDP is growing, it doesn't mean that the economy is out of the woods. It doesn't mean that the economy is the best there is in the world. We still have a lot of structural problems, and obviously
Yes.
the number one problem is unemployment. That keeps on rising quarter over quarter, right? And then
Yeah.
obviously many other political things that are going on in the country. But with the rand, currently I see the rand gaining strength, perhaps
Yeah.
till Q4 this year, and then maybe until, because now, okay, this is the
The
USD dollar chart.
chart.
Yeah,
Okay.
I think we may retest that 13.5 level for like a double bottom, and then obviously this will probably take us into Q4, and then maybe starting from then around Q4, we'll start getting the Q3 GDP and more unemployment numbers, and then I feel that's where we'll see the turning point of the rand to the downside. So I think the rand, I don't see the rand gaining strength beyond 13.5 or 13.2. That entire support area there, I don't see us gaining strength beyond that.
Yeah, I think because also if you look at the rand, also it normally performs well in Q4, where it get to your winter period in the north, and also with a high demand of commodities, and obviously it looks like there will be a high demand for commodities regardless. And 1350, I must say, it looks very realistic, is how you pointed out now.
Yeah, obviously with commodities, another thing I think to point out with commodities is that it's commodities are sort of the backbone of South Africa's economy, but one thing to know is that commodities don't really contribute much in terms of GDP, although we do export a lot, but they don't have a high contribution towards GDP. So if now we're going to have an economy that's dependent on commodities solely, then we're going to have a problem, because commodities don't really contribute much towards GDP. So even if the demand of commodities continues into next year, but we're going to get to a point where now the commodities alone just can't keep carrying the economy. So we're going to get to a point whereby we have a lot of commodity exports going on, but the economy is still contracting, because commodities alone, they don't really make up a huge percentage of GDP. So we still need the consumer services. We still need the services side of the economy. We still need the industrial side of the economy if we're going to see the rand breach the 13 rand mark and to go further above. So I don't see us breaching that level.
Right. And no, I'm with you there, Swing. Just the last question before we go to the break. There was actually a very disturbing article, actually, what I was reading. I think it was last week, where the CEO of the JSE of Johannesburg Stock Exchange, or Securities Exchange, was saying that foreigners are actually dumping our stocks, and she has sleepless nights. If that is her direct words, where she has sleepless nights of how many people are actually. How many people are actually dumping the stocks? Foreigners are dumping our stocks, and to look for other places to invest their money in. What is your take on that specific? Because that gave me sleepless night after reading that article.
I saw the article. It came out sometime last week.
Yeah.
Look, I think she's on the money. She's definitely spot on. There's a lot of money or divestment taking place in the JSE, and it's not taking place within the JSE only, even with the government securities as well, which is government bonds. There's been a lot of divestment, which started in 2018. Obviously, following a series of credit down ratings, right?
Yeah.
And then obviously that led to other assets, obviously within the JSE facing divestment. So there's a lot of investors leaving the country due to political unrest, and obviously secondary to that would be the economic instability that we are seeing, high levels of unemployment, a lot of businesses are closing shop. So obviously what that means now, South Africa is not really an investment destination. There's a lot of things going on. There's a lot of instability. There's just not enough consumers to support these businesses. And as
Right.
such, these businesses that are in the economy, they also reflect the performance of the JSE, or the JSE is a direct representation of the businesses that are within the economy of the same
Yep.
listed companies. So if those companies are not performing in real terms, then when they file their financial performance, investors abroad,
Yep.
they look to that financial performance to say these companies, they're not making money. So as such,
Mm-hmm.
they have no reason to invest in such companies. So they just pull out their money off these companies and take it elsewhere.
Oh, because obviously, I'm sure it also gave you sleepless nights when you were reading that article.
Look, um,
It-
I no longer get sleepless nights because this is the picture I see on a daily.
yeah, no, but it is actually a bit of a concern. I didn't
No, it is
think it
definitely a
would.
concern, honestly.
It happens so fast and
No,
so
it
aggressively.
is.
Where foreign, I was actually more under the radar that foreigners still love the cheap buys in South Africa, and I see actually that is not the case anymore.
No, unfortunately, that's not the case. I mean, foreigners, they need an incentive to stay in your country. So if there's no incentive, they just have
True.
no reason to stay. I mean, you have the U.S. economy, which is just humming at
Uh-huh.
unseen levels before. So why would
Yeah.
such investors want to keep their money in South Africa and not go to the US and not go to Australia or New Zealand or all these other countries that are seeing a stellar performance? So at this moment, there's no incentive for staying in South Africa, unfortunately. There's a lot of political instability. There's a lot of policies that are being thrown around, which create a turbulence, and such as I think the obvious one would be the EWC, the expropriation without compensation, that created a lot of turbulence for foreign investors. And from the announcement of that policy, a lot of investors left the country due to that,
Hmm.
because it meant that they stood a chance of losing their properties to the government.
Yeah.
And these are not just
That,
properties; these are businesses. So basically, they
exactly.
stood a chance of losing their businesses to the government. So they fled the country around the time, also with the credit down ratings and the poor economic performance and all these other events that we know of.
Oh, swing trader. With that news, let us go for a break, and then we will come back with some more information.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good evening and welcome back to Bull Market Stock Show. We are with Swing Trader, and Swing Trader is literally blowing everything apart here. All the questions that I actually got for him. Please don't forget to subscribe to my YouTube page. Please click on the link below. Register a free account and fund the account with $250 and get my class absolutely free. Please don't forget also to throw in your questions for Swing Trader. Where it's with the Nasdaq, where it's with Bitcoin, where it's with gold. Please give those questions so that Swing Trader can answer them. Swing Trader, you still with us?
I'm still with you guys.
Look, there's one thing that I actually was thinking of now, with the whole South African economy, and we did have last time a discussion regarding the South African economy and the disinvestment regarding it. With the unemployment figures, it's sitting at record numbers at 34% now with the unemployment rate. Um, to be honest with you, do you think that South Africa can turn things around when it comes to the unemployment rate in the next 5 years?
Shoo, 5 years. Wow. I think that's a bit of yeah, I think that's a very, very tight stretch. But honestly, I think it's possible, right? Obviously, we know that any economic situation can be turned around with the correct policies in place. Although 5 years might be cutting it too thin, considering the level of unemployment we're currently seeing. But I feel that in 5 years, there could be a lot of material progress towards bringing the unemployment level down, should
Right.
the correct policies be put in place. Although we may not have like a 10% unemployment rate in 5 years' time, but should the correct policies be in place and actually put in action, I think we could be able to bring the unemployment rate down uh, considerably. Yeah, I think so. But obviously, it won't be because now I think the youth is sitting at 74.4, which is the expanded, and then the official unemployment is sitting at what is it, 34. So I
Correct.
think, yeah, in 5 years' time, I think obviously the first thing we need to do, or we need to put in place, is to ensure that we involve the private sector, because now obviously the government is trying to do everything by itself, and it's just leaving the private sector out in the cold. I mean, there's a lot of
Yep.
businesses in South Africa, there's a lot of industries that are capable of delivering serious growth, which can bring unemployment down. But until
Correct.
such parties are brought into the picture, until such parties start playing a role into bringing
Yep.
unemployment down, then unemployment, I don't see it coming down. But if these people are brought in and then they part of the process, they can bring
Right.
unemployment down in 5 years' time.
Correct. Someone was actually pushing a comment through the chart whisperer. Excuse me. He actually stated that if they stop killing the boer, maybe they will turn turn it around.
No, man, I feel it's beyond racism, or it's beyond race, because now a lot of problems we're facing are structural, actually, and obviously they are they're brought on by the government, maybe due to misunderstanding of some of the policies, or misunderstanding of what they're actually doing and the repercussions of their actions. I mean,
Yep.
if you look at the economy, we got here where we are now in less than 5 years. It literally took us less than 5 years to get to where we are now. So if
Correct.
now, obviously, rebuilding takes a bit of time, but
Yep.
should proper policies be put in place, I feel that investors, foreign investors, would come flying into South Africa, would come back flying in South Africa, and obviously that capital will allow for more businesses to surface, will allow for more employment to be created in a very maybe short space of time, and that could start bringing their unemployment down. But obviously, race, I don't think it has anything to do with race. When you run an analysis on the country, you realize race is nowhere in the picture, but everything is all structural, government, the private sector, and how they tie in with each other.
Absolutely. It's just also the thing is also the rule of law, which is for me absolutely, which is actually the fundamental thing of the primary mandate actually of the government is actually to protect its citizens. And once he fails there, that is where you get a lawless actually society. And but mainly, I think government must just get back to the basics of where they need to start with their structures, and that is actually to get the rule of law actually right, put the borders on, police the streets, and don't use actually neighborhood watch as police nowadays. They are the only police now, basically in the areas. So if they sort out the police, sort out the border, sort out the army, and I think that is where things can turn around. I think they must take small steps and not have a brigade of jobs for them. For example, they want to do business, they want to do tenders, they want to be in medical care, they want to do all over. I think that is where government, for me, is getting it totally wrong because they want to be all over the show. They want to be at sports, culture, events, and all of those things. I think they must just stick to their mandate, and that is actually to protect the citizens against foreign threats and domestic threats. And I think that's it for a government. I don't understand where they have to do with tenders and all of those things that needs to come in. And I think that is where governments are getting it wrong, from my understanding. And also, if I look also with the level of protest in South Africa, there's actually a trend that goes on. First, we had your normal for house protest for housing and water, and then it was now afterwards it goes to the spaza shops, And then after the spaza shops, it went on and on and on, and now we're getting into malls, and that is where things are getting out of order for me. And I hope South Africa can literally turn these things around, honestly, because otherwise we're going to miss a very good opportunity when it comes to South Africa.
No, I definitely agree with you. I definitely agree with you. There is a clear trend in terms of the protest. I think they just keep escalating. They're going from one phase to the next phase, and obviously, I think the protest we're gonna see, or we likely to see now going forward, are mainly economical protests. They all about economic inclusion. They're no longer about service delivery or potholes and the likes, but they now more about economic inclusion. You see, so
Yeah.
I think obviously as things deteriorate even further, we'll likely see more protests now, where people are just voicing out their anger, they're voicing out their disappointment and everything they're feeling on the inside towards the government. And I think we're just going to see all of those. But now, obviously, we have a new finance minister. Also, with him, it's a bit difficult to make a judgment as yet. Obviously, we know of his past, but obviously, we cannot use someone's past to predict the future, because obviously he's a person,
Right.
and every person changes and they grow. So we can't use his past to try paint a picture of the future. So I think the first thing that will give a heads up or a bit of signs or an indication of where we might be heading as a country is the medium-term budget policy statement, I think, which should be next month. So I think with that event, that's where we'll get a lot of pointers of what his intentions are regarding the country and what direction is he trying to take the country towards. So I think for now, with regards to him, I'm just waiting for the medium budget policy statement to get pointers as to what we expect going forward, as far as the fiscal space is concerned, and in terms of the budget as well, the taxes and many other policies that are associated with the Treasury Department and government.
Yeah, I'm sure we're licking our lips there for any wrong thing that goes on, and then we definitely go after him. There's someone who's getting boring with us. He's actually stating here, swing trader, can you really make money in FX with $100? The chart whisperer.
Sure, but I think that question now is taking us out of context, and
he's getting pissed with us now, and he's changing the whole argument and getting into Forex actually. But it's just actually a very interesting question.
Look, I think we have to be realistic as far as capital is concerned. I mean, if you're gonna come with $100 and you're expecting to make $100,000, that's unrealistic. that's honestly unrealistic.
Right. That's a very good answer there. And then you actually know, okay, then he goes on with politics and then show me the money, blah, blah, blah. But I will just take a short break with that comment of Swing Trader, and then we'll be right back with some more information with Swing Trader.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good evening and welcome back to Bull Market Stock Show. This is your host, Rian Thompson, and we have conversation with Swing Trader with his whole entire market analysis when it gets to the Nasdaq, South African economy. We even discuss politics also now, but we will definitely do the famous thing that everybody wants in South Africa, and that is the Nasdaq. Please don't forget to subscribe to my YouTube page and also click on the link below, register an account with markets.com, fund it with $250 and get my class absolutely free. Swing Trader, are you with me?
Yes, I'm still with you, Rian.
The favorite, the South African favorite, and that is the Nasdaq. But actually, I'm still laughing for your your comment that you made regarding the $100 trading account. And you know what? There's actually people that trade with $100 on the Nasdaq.
Look, with the Nasdaq, look, there's various brokers, and they all offer various services and various price codes, right? With some, but obviously with Nasdaq as an asset or as an instrument, looking at its price, $100 would be unrealistic. We would be cutting it too thin, right? I mean, Nasdaq,
Exactly.
what's the price on Nasdaq? About what's 16,000 or so. I'm not sure of
Close to
the
16
actual price.
years.
Yeah, so that's
Yeah.
cutting it too thin. I mean, if the one position or a contract sells for 16,000 and then you come in with $100, it means now to get exposure you'd need to be leveraged about 100 times. You see, and
Yeah.
that's where the problem starts now, because now you're using money you do not have. You're basically committing all of your money on that particular position. So should
Correct.
things go
Correct.
haywire, the broker's just going to take the entire money out of your account, because now you're buying something you do not afford. So
Absolutely.
so with indices, they're very expensive. They're quite expensive because now indices are basically stocks, right? So they just
Yes.
uh, made up of stocks, but now obviously they sell much more expensive than stocks. So if you come in with $100, it means you're gonna need a lot of leverage to be able to get a position in any of the indices. And obviously, as soon as you use leverage to get a position, then you're gonna have problems should things not go in your favor.
Absolutely. So where do you think the Nasdaq will go? Basically for this week, because I also got that question earlier today with the Nasdaq. When the show started, someone pushed out the question already. Where's gold? Where's the Nasdaq going? Before you start to talk with oil, he doesn't want to know about oil. He just wanted me to get to the Nasdaq. So where do you see the Nasdaq going?
Okay, on the screen we have an S&P 500 chart, which is more or less the same thing with Nasdaq or most of the indices. So with Nasdaq,
Right.
again with end of the week, I think it's also cutting it too thin, considering that not much has really happened in the past couple of in the past 2 or 3 weeks, right? It's just
Right.
been slowly grinding up, but technically, I'd say that we actually. I'd say we at the extremes,
Yeah.
and I'm expecting a correction, a minor correction, not something large, something maybe like 7 to 10% at most, a
Yeah.
correction of 7 to 10%, and then before we start resuming the trend up. So for now, I feel that we at the extremes, and we could get a pullback, a minor pullback, not something heavy. So obviously with pullbacks, you can never tell when we're gonna get one. It could be this week, it could be the other week, it could be next month, right? So I think this is where now your framework or your system, whatever you call it, comes into play now to say,
Right.
okay, look, we've reached the extremes. What do you do now in this case? Do you force and go in, or do you just sit out and wait for a pullback? This is where now your framework comes into play. Obviously, we know that the basics of technicals is to buy low or sell high, right? So you can't be now
Right.
wanting to buy high and selling low. So in terms of the trend, the bullish trend is still very much intact, both
Yeah.
technically and economically. It's still very much intact. So I'd say now the only thing that's out of alignment is just the technicals. They're just a bit of out of alignment. They are at the extremes, and I think in this case it would be wise to just wait for a minor pullback. Anything
Yep.
between 7 to 10%, then maybe you can start looking to go in. Because now at this point, I don't see anything that might send the entire market crashing down or anything like that. I don't see anything, unless obviously we get another black swan event, which is unlikely at this point, because we have
Right.
the Fed backing the entire market up. So I don't see anything out of the ordinary that might come and crash the market. So the bullish trend is still very much intact, and I'm just expecting a minor pullback between 7 to 10%, before things start going up again.
Yeah, absolutely, the swing trader. So for this week, you would say you sit on the fence when it gets to the Nasdaq.
Yeah, I think it's best to sit on the fence. Obviously, this now brings your system into play. What does your system say? What does your framework say? How
Right,
how do you treat market extremes? How does it respond to such conditions? You see, so obviously we all have different frameworks and we all see things differently. I think the time frame as well is one of the most important factors in this case. For someone who's looking at a weekly chart and someone who's looking at a 1 hour chart, we all gonna see something different, right? The one looking
right,
at a 1 hour chart might see a huge upside, whereas someone looking at a weekly chart sees absolutely no opportunity. You know what I mean? So it's whereby your
right,
framework now comes into play to say, what does it tell you? What does it say about such conditions? Does it say sit on the fence or go in? So, but obviously
right.
with me, um, everything now, the robot is just amber. It's just saying stay out for now and see what happens.
Right. There's actually a question that actually came through. Any technical indicators are SNR levels something? That is actually the question. That is
Okay,
now for the Nasdaq.
so I'm guessing the person wants to know a precise level.
Uh-huh.
Like I said, I'm expecting a retracement of 7 to 10%. So if whatever charting platform they use, I think I know TradingView, they have like a measuring tool where now you can
Uh-huh.
measure the price movement either
Right.
from one point to the next. So when you use that tool, it actually tells you the percentage of the move.
Yeah.
So it would be wise to just measure from the current price to another point, and then just when it gets to 7% or 10, then just look
Hmm.
what level the price that price would be. So I think it should be at support because when I did it earlier, it was at support. So I just can't remember the actual price, but I know the retracement was between 7 to 10%, and it
Okay.
coincided with a level of support.
All right. Just a last question. Any word of advice for upcoming traders or struggling traders? What first? Let's start with the upcoming traders, and then for people that are struggling.
I think I think both would be in the same category because obviously if you're still upcoming, it means you're still not informed, and then obviously if you're struggling as well, it means you're also facing a problem of misinformation or lack of information. So I'd say, look, just take time and read as much as you can, learn as much as you can, and just try to educate yourself as much as you can. And one thing I think obviously a lot of people do not know or they have a misconception of is that the price chart has everything. Obviously, with my experience and everything I've learned and everything I know is
Mhm.
that not everything is on the price chart. The price chart
Yeah.
just tells you what price the asset sells at or where the asset is in terms of support or resistance. There's a lot of factors that go on behind the scenes. Obviously, it's all the things we've spoken about earlier,
Right.
which determine where an asset would be in the next 12 months or where an asset is likely to be in the next 6 months and the likes. So just educate yourself as much as possible. Try to learn economics. It's the cornerstone of trading. It's the cornerstone of investing. It's the cornerstone of the market. It's what governs the entire market as we see it or as we know it. So learn as much as you can, be friends with economics, understand what's going on around you. There's a lot of events, political or economical events that are going on around us. Make sure you understand what those mean because every event that happens or that takes place, it has an impact on the market that you are trying to trade or that you are trading. So learn as much as you can. Not everything is on the price chart. The price chart, unfortunately,
Hmm.
does not tell you everything. There's a lot of factors and fundamentals that go on behind the scenes that you never get to see on the price chart or you never get to know about. Educate yourself as much as possible. Take time out. Just commit those hours. Just learn as much as you can.
Absolutely. Swing trader, thanks a lot, man. I really appreciate tonight's show. And I hope this will not be the last. We need to make more. We actually covered the whole entire hour. Me and you was actually the show, and it actually flew past very quickly. I must say thanks a lot for tonight's show. I really appreciate it, and we must definitely do it again.
Thanks to you, Rian, and your viewers and listeners. It was a pleasure being on the show, and my door is open for another show anytime you feel like having me on the show. My door stays open, and it was a pleasure being on the show. And obviously, I think it's also a great platform to share the little that we know with other people out there, and just try to give insight and pointers and headers to some people who feel maybe this thing they can't crack this thing, or they just can't do it. I mean, we've all been there. That's how we all started.
Correct.
So I think this is also a great platform to just put out information to people out there who are just trying to get a hang of this thing and reach a certain point. So thank you for having me on your show as well.
Thanks a lot, man. I really appreciate it. Lovely evening, swing trader.
Cheers.
Cheers. Bye-bye. That was Swing Trader, ladies and gentlemen. It was an absolutely great show, and I really appreciate it a lot. I must say, he's a remarkable trader and also a remarkable person. Thanks a lot, everybody, for tuning in and spending your evening with us. That's all from my side. Bye-bye.